Welcome to today's market report. European stock markets edged higher on Tuesday as investors balanced more corporate earnings and further progress for the US stimulus package with disappointing Japanese growth. The DAX in Germany traded 0.1% higher, CAC 40 rose 0.1%, FTSE climbed 0.2%. European equity markets have struggled to continue Monday's rally to any great degree Tuesday as economic news out of Japan disappointed as the country's economy expanded at a slower than initially reported pace in October to December, growing 2.8% on the quarter versus a preliminary 3% gain. A further sharp drop in Chinese stocks despite the intervention of state-owned funds to prop up prices also soared the mood. Bank of England Governor Andrew Bailey said on Monday that risks to UK economy remain tilted to the downside. This brings the revised fourth quarter European GDP growth figures due later in the session into focus, with the region hard hit by COVID-19 related restrictions during that period. In corporate news, Continental stock slumped over 6% after the German car parts manufacturer forecast a lower profit margin than expected for the coming fiscal year, due partially to the global shortage of semiconductors that has pushed up prices for a key input into many of its products. Vivendi stock dropped 0.5% after the French media giant faced a claim for €1 billion in damages after a group of investors alleged the company made false financial statements during a merger deal 2 decades ago. Vodafone stock rose by a similar amount after it set the price range for its mast business, Vantage Towers, which is due to start trading in Frankfurt next week. On the flip side, one of the success stories of the COVID era, Domino's Pizza, saw its stock rise over 8% after launching a £45 million share buyback program as profits climbed. Across the Atlantic, the Biden administration's $1.9 trillion COVID relief is set to be taken up by the House of Representatives by Wednesday morning at the latest, Speaker Nancy Pelosi said on Monday. This follows the Senate passing the package on Saturday. Once the bill is passed by the House of Representatives, it will then make its way to President Joe Biden to be signed into law. Oil prices edged higher on Tuesday, continuing Monday's early gains, with traders turning their focus onto the release of U.S. crude oil supply data from the American Petroleum Institute due later in the day. Crude futures traded 0.7% higher at $65.50 per barrel. Brent rose 0.8% to $68.78 per barrel. Gold futures rose 1.4% to $1,700.70 per ounce. On the FX front, GBP/USD fails to find acceptance above the 139 and recedes, although holds a major portion of intraday gains so far this Tuesday. Broad-based US dollar weakness amid an extension of the retreat in the Treasury yields continues to aid the recovery in the cable from the 138 level. From a short-term technical perspective, as observed on the 4-hour chart, the GBP bulls look to challenge the powerful barrier at 139.20, which is the convergence of the falling trendline resistance and the bearish 50 simple moving average. A 4-hour candlestick closing above the latter would confirm a falling wedge breakout for the major, with the next major hurdle seen at the horizontal 100 SMA at 139.59. The relative strength index has reclaimed the bullish territory, now trading at 51.90, allowing room for more upside. It's worth noting that the price has pierced through the critical 200 and the 21 SMAs early on, boosting the odds for an extended recovery. Eurodollar has recovered as US yields dropped off the highs, but Americans' vaccination advantage, upcoming stimulus, and bond auctions all point to fresh Eurodollar force. Congress is on the verge of approving President Joe Biden's massive 1.9 trillion coronavirus relief package, and the mere need to issue more debt is set to raise yields and the dollar. A bond auction due on Wednesday is highly anticipated. In the old continent, updated growth figures for the fourth quarter will likely confirm the contraction of 0.6% previously reported. Prospect is not much better. European countries have vaccinated roughly 8% of their populations, while the US is at 18% and accelerating. Italy's fresh COVID-19 wave is of specific worry. The dollar index is at 92.13 after earlier climbing to 92.528, its highest level since late November. This is today's market news. Thanks for listening. We'll see you next time.